Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with the analysis of the gold market. So on Friday, although gold was bravely resisted to all headwinds that were standing in the market, especially rising of the interest rates, but under pressure of the hawkish statement from the Jerome Powell, it still has made another downward action. And on Friday, finally bears was able to close below these previous lows and erasing the bullish grabber. In fact, this is not the only reason why we suggest deeper downward action. So currently on the common week we consider only downside direction. So if last week it was still 50-50 that it might be proceeding to the upside, but now our major scenario with this ABCD pattern now takes and moving in the active stage. And well, this downward action, and actually on the weekly chart, if we'll take a look here, also we'll see the bearish reversal week here. Currently we do not have any bullish grabber. Potentially it might be formed on the next week, but in the current situation with this performance, it seems that, well, more probable that weekly trend just will turn bearish rather than we will get the grabber. We will see, but currently on the next week definitely we are not considering taking any long position and watching to the downside based on the pattern that we have here. And with this downward continuation, the market has broken through the support and erased any bullish patterns that have been formed. For the next week, probably it makes sense to set the bottom, the floor, is around 19 even. It's just because this is oversold. This is the same confidence support area that already has been tested once, and that will be the nearest extension, which is the COP, around 1893. So supposedly that area should become the potential floor if market will be able to get there. Speaking in general, today I think we prepared, well, interesting report. It's because we have tried to analyze the new vector in the analysis opinion on the economy in the United States. Mostly we have prepared the in-depth analysis yesterday in the Fed policy and why we think that it is not enough efforts from the Fed to control the structural crisis events that now stands in the United States economy, why we suggest that these efforts provide or will be resulted in just minimal effect on the United States economy. Mostly we suggest that might be useless. It's just overall background stands very simple. Dollar is 2 times overvalued to the real gross domestic product. So it means that on the consumption side, on the supply, on the demand side, it is too many desire to consume, while on the production side, it's not enough to satisfy this demand. And at the same time, it was printed a lot of money. So actually, to keep it short, the position that has been announced by the director of the IMF, Georgieva, he said that we have printed too much money without paying no attention to possible consequences. Now we do not know what to do with this, and we think that we're too late to do something. Now, this is perfectly explains our position from just without any sophisticated economical discussion. So, and now put all this stuff in a tricky geopolitical situation and the deteriorating of the global economy, and you will get the result. So that's actually what is waiting for the United States closer to the end of the summer. As we come closer to the elections in the United States, as more evident become the problem that Fed tried to mask under their rate decisions, and that is currently disguised by the big cash flows from the European Union. by the end of the summer, these cash flows mostly should be over, and the problems in the United States economy should become more evident. So all this stuff stands perfectly in our long-term view. As we said, and last month already we talked about this, that in the nearest few months through the summer, because also the gold actually cyclically bearish in this period, for the summer we suggest that gold remains under pressure. So we're not include the chance that it might be deeper retracement, but it is not breaking the overall bullish view. We think that this period will be perfect for accumulation. Also, we suggest that it makes sense to make this accumulation physically, to buying coins and bullions. So just because it is more reliable. We're also favor the silver, just because we think that silver is undervalued and it now has the big demand from the production. So the gold and the silver currently, palladium is also interesting, but it's too expensive currently. So if you have ability to accumulate, you do not know where to invest, maybe the physical gold and the silver might be good solution, because it also do not depend on the operation of the exchanges. Well, that's shortly what we have strategically. So closer to the end of the year, next year, we suggest that bullish trend on the gold should be reestablished after the retracement. In the shorter term, as we said, we're watching down. On the 4 time frame chart, market now stands at the 618 support 1930, although we still have this theoretical ABCD pattern, but currently in this new environment, it seems that the failure of this pattern is just a question of time. It's more probable that market should break it down. But since market stands at support, we intend to consider possible pullback. And since market is just the set direction, so actually it was standing full indecision for a few sessions here, now is setting the direction again, and coming to the nearest minor target, the COP. We suggest that the pullback should not be too strong. And from that standpoint, well, 1946, 1947 area looks interesting, at least for a first view. If market stands bounce up, with the supposedly placing stop above the next confluence of the 1954, 1960 area. So placing initial stop somewhere in this area. That's the scenario that we intend to consider as soon as market will start showing the pullback. If no pullback happens, market will just break it down. Well, in this case, we will try to catch the minor pullback on the way down. So that's approximately what we intend to go with, and that's just shortly the plan that we will follow. Also, guys, pay attention that on all the divergences that we have mentioned previously, here the divergence on the 4 time frame time divergence was all of them right here have been erased. That's once again explains why divergences are not reliable if they are forming not at some solid support or extension target. So that's all for this video. Let's keep going through the week and see what will happen.